Hello, folks. Good afternoon. Today at 100x Live, we have Mr. Rajan Anandan. Rajan, as a part of the leadership team at Sequoia Capital, is focusing on developing Surge, top scale program for startups, acting as an investment advisor, mentor to programs founder. Prior to Sequoia, as a VP of Google India, Southeast Asia, Rajan played a key role in expanding region's internet ecosystem. I've personally heard Rajan multiple of time, and it's like inspiring always to hear his thoughts and his viewpoints and the vision about how internet is going to change the world and how India is looking up. So thank you, Rajan, for coming on 100x Live. Look forward to hearing you next 30 minutes. As an opening remarks, if you can just help entrepreneurs understand your current remarks on current crisis and what are you looking in the VC world? What should entrepreneurs do in current crisis?
Yeah, good afternoon, everyone. And Sanjay, thank you for hosting me. It's great to be here with you and focus on this very important topic that we'll talk about. So first and foremost, hope all of you who are listening in and watching are safe, and your families and your teams are safe. Look, as we all know now, this is a crisis that we haven't seen at this scale globally for over 100 years. And India is at a very interesting point because, we've been in lockdown for over 70 days. And as we are opening up, we are still in the very early days of our crisis, right? So we're at over 200,000 cases. And over the next 4 or 5 weeks, this number is going to 5x. And then we'll probably 5x from there. So we are at least 10x of number of cases to go with the next 2 months. So, so we have the interesting sort of place where, on the one hand, we're opening up the economy, which is the right thing to do, but on the other hand, we're going to see at least a 10x growth in cases from here. So, in many ways, the very challenging context that we've been in as startups in India is going to continue, right? So we will see businesses sort of opening up, and I think if you look at many sectors like e-commerce and others, we've started seeing that. But at the same time, we're going to see obviously this healthcare crisis in India get in many ways 10x more intense. So that's sort of the context that we're in, and I think the most challenging part about this crisis is that this is not something that's a 1 or 2 month phenomenon. It's a phenomenon that is going to last 12 months, possibly 18 months and 24 months. And then the ripple over effects of this is going to last a long time. And that's sort of a contextual, that's a context and a sort of a situation that nobody's really faced, right? I mean, I think much like Sanjay, I've been leading businesses for a very long time before I came into the venture capital industry. So 2008, I was leading Microsoft in India. Very, very large business, global financial crisis. Before that, you go back to the late 90s with the Asian financial crisis or the dot-com crisis. These are all very, very different crises. And I think in many ways, those were at least somewhat more predictable than this one is. This one is just so unpredictable on many dimensions. And I think in that context, really, for startups, I'd say the first and most important priority is safety, obviously, of your teams. And I'd really encourage all of you who are out there that keep in mind that the number of cases in India are going to 10x from here. So please take care of yourself, your teams, your families, be super, super and extra cautious. But I think the other one is really, given that we don't know how long this is going to last and the shape of this crisis, runway. And I think if you're a startup founder, you've heard this probably term more than you'd ever want to hear in your lifetime. But you've got to have 18, 24 months of runway and find a way to get that. And I know it's very, very difficult, especially if you haven't raised the recent round of financing. It's very hard to do, but do that. But then beyond that, once you're pretty comfortable that you can make it through, I think it's a great time to focus on the basics. It's a great time to sort of really, really make sure that you're building absolutely incredible products, which we'll talk about in terms of do your customers love you, which is one of my favorite topics, and also reimagine the business in very fundamental ways, right? I think it's a great time to reimagine whether it's the product, whether it's the customer segment you're going after, whether it's how you go to market, whether how you do marketing, the kind of team that you want to build, because the one thing we all know for sure is at the end of 2021, the companies that are going to be around, meaning the startups that are going to be around and are going to be doing well, they're literally going to be 10x better than the companies that we have today. And the reason for that is very simple, right? The management teams are going to be, the founders and the management teams are going to be much more seasoned because they would have lived through a crisis that the world hasn't seen in 100 years. And also the business models are going to be very, very strong. So we can talk about this, Sanjay, if it's relevant. But if you have revenue today and you don't have strong unit economics, you probably won't make it. Right. And the only reason I say probably is you may have enough capital where you can push your way through the next 18, 24 months. But so as a result, the companies that are going to be here in 2021, if you fast forward 18 months, they're just going to be absolutely incredible companies. Right. And I think that's very powerful. And the last thing I'd say in the opening is it is also a very, very good time to start up. Right. If you have the right idea and you really have conviction around the problem you're going to solve. And the reason is because actually there's no better time to start a company than in a time like this, because everybody else is focused on other things. You won't have 100 companies come after the same space, and that makes it very interesting.
Sure. Thank you. Thank you. I think that was a quite positive one, saying that we will see emergence of startups being more stronger and better in coming months. Let's get into the topic, Rajan, in about product market fit, what customers would love, how it is determined. How would you determine a product market fit? What are the indicators? What do you mean by product market fit and customer love? Like, if you can just delve into that.
Yeah, maybe I'll take a step back, right, and say, look, if you're building a product, I mean, right, a company sort of starts with a vision, a long-term vision of what you want to do, then you have an idea, and then you start building a product, right? So when you're building a product, look, I sort of ask three very fundamental questions, right? The first is, who's your user or who's your customer, right? Because you can't build for everyone when you're an early stage company. Second is, why do they love you, right? Or do they love you? And third is, how do you make sure that they keep loving you, right? And so user love is a very, very important concept. And what that really means is user love is the reason that a customer, it can be a consumer, it can be a business, will use your product in the first place. But more importantly, will continue to keep using you, right? And if it's a revenue generating product or a service, it's the reason that you're going to be able to get a consumer or a business, a customer, to continue to pay you. So that's really what it is, right? And in terms of how you measure it, there are many different ways to measure it, right? But I'd say the single most powerful way to measure it is retention. Right. So let me give you an example. So let's say you're building a consumer internet app, and you've got 100,000 downloads, or let's say 1 million downloads, right? But let's say that your 30-day retention is 4%. Do you think that your customers really love you? And the answer is an unequivocal no. Right? They do not love you, because 30 days after they actually downloaded your app, 4% of your customers are still using you. Right? Now, there may be an exception, like a gaming industry where the dynamics are very different, but in most consumer internet spaces, we'd say that's pretty bad. Now, if your retention is, let's say, 8% 30-day retention, we'd still look at that and say, look, there's not a whole heck of a lot of customer love there, right? So retention on the consumer side, you can look at retention, GMV retention, you can look at user retention. On the B2B side, by the way, retention, you look at churn, right? So let's say you're building let's say you're building a SaaS company, and let's say you're building an enterprise-focused SaaS company, and your monthly retention is 2%. I really worry about that product, because that's 24% annual retention for an enterprise SaaS company, right? And let's say on the SMB side, 2%, not great. But if you have 1.5%, that's okay in SMB retention, depending on the kind of SMB SaaS product you're building. So I would say, Sanjay, retention is probably the single biggest thing we look at. But if you can't easily measure retention, in many businesses you can measure retention. But let's say let's say you've got a consumer D2C consumer brand, a new consumer brand like a beauty brand, and you're actually selling on Amazon. You may not be able to measure retention because you don't know which customers are really buying it, etc. So then you can look at things like ratings, right? Like for instance, if you're a brand that's selling on Amazon and we are looking at it from the search team standpoint, first thing we go to Amazon, we look at your ratings, or we go to Nika ratings, or we go to Grofers ratings, right? If you're an app, we look at Play Store ratings, because again, it tells us, look, what do consumers really think about what you're doing, right? And then there are a few other ways, right? So for instance, one metric you can look at is, if you can ask your consumers, your users, whether they're consumers or businesses, if this product didn't exist, what percentage of your customers would be deeply disappointed that they didn't have this product or service, right? And there's a magic number of 40%. So if you do that survey or you do that assessment, and more than 40%, so let's say 80% of your customers say we'd be deeply disappointed if they didn't have this product. That's actually very, very good. So those are the set of metrics that we use. But if you talk to a lot of folks, they'll say, how do you know your product market fit? Well, you'll feel it because the product is just going to be growing, right? Without you even trying, you can't keep up with the demand. That is absolutely amazing product market fit, and I agree with that. But you need to have some earlier signals that you can look at for product market fit. So one of the things we really try to coach our founders on at Surge, Sanjay, is before product market fit, you should not try to grow your company, because one of the biggest mistakes that early stage founders make is they focus on growth before you have product market fit, right? Your retention is very poor and you're driving for growth, right? Because quite frankly, I don't care if you have 1 million MAU if your 30-day retention is 7.5%. It's not a company that I think is going to be an enduring business or a product that customers are going to love. So growing before you have product market fit is almost always a recipe for disaster and failure, right? So I think that's a very important point.
I think you gave a good indicators in terms of what to look in from a B2B, B2C kind of businesses, and the retention is going to be the key. But at what point, Rajan, you believe entrepreneurs should start thinking even about product market fit, right? Is it that when they are creating an idea at MVP stage, at seed stage, Series A, what is that point that people have to start discovering product market fit? When should they start thinking?
See, look, I mean, if you're a founder, right, and you have a vision of how you would like the world to look, and then you say, okay, then you have to get to the next stage, which is you have to build a product, right? You build a product, you have to say who's the user. So you come up with a set of user personas, you do a fair bit of research, then you actually get a product and launch it. Well, right there, right? I mean, the whole idea of launching a product is to find product market fit, right? Is to find a set of users, call it core users, power users that are going to love your product. And until you find a set of users who are going to love your product, who are going to keep using your product, which means retention is going to be strong, you should not do anything else. You should not be hiring a lot of people. You should not be trying to grow. You should not be spending money on digital marketing. So it's very, very early, Sanjay, because it is the earlier stage, right? So actually, when you look at, let's say, seed stage, right? So at Surge, we have companies that are pre-launched to companies that have launched, that have early early metrics. The number one thing we coach all our founders to do is you've got to find product market fit. You've got to find product market fit. Until you find product market fit, everything else, no point growing, right? If you don't have product market fit, why do you want to grow your team to 50 people if you don't have product market fit? So it is very, very early. And if you talk to Series A investors, they would say, in fact, this morning, right, we continue to be very, very active as Sequoia across all stages, seed in Surge and Series A, B, C, etc. We were just on a call, incredible founder, right? Incredible founder building a super interesting business at Series A. So for a Series A, you need to have product market fit to get Series A, right? At seed, awesome founding team with the right sort of founder background, going after a big space with deep insight. Yes, that's, we would make the seed bet. A lot of our search companies don't have product market fit. That's absolutely fine, right? But they need to find product market fit. It is the thing you have to find.
So that brings me to the next question. Is there a correlation saying that a product market fit companies would get better venture capital funding, or VCs chase them? And one of the while you have given enough indicators, is when do you start talking about product market fit to venture capitalists? Right? How do you talk to VCs about product market fit? How do you
Look,
pitch them a product market fit slide to a VC?
yeah, so I have a couple of thoughts on this. Look, there's a reason that companies like Google and Facebook, like TikTok, have done so well, right? It's because they had a product that had product market fit, right? I mean, so Google, by the way, was not the first search engine; it was the ninth search engine, but they actually built search that worked, right? Before that, the search results weren't that good, and so on and so forth. So they actually built a product that worked, and then it just took off, right? And where you could measure it is, what percentage of people who use search come back, right? So daily active or weekly active search users, and so on and so forth, and percentage of accuracy of the search, which is the product quality metric, if you will. So look, this is super important, right? And look, from an investor standpoint, whether you talk about it or not, that is the question they're asking. I can tell you, at least from a Sequoia standpoint, right? If you've already launched, right, and let's say you've got an early set of metrics, or you've been around for even 2 or 3 years or 4 years, and you've got a set of metrics, the number one question we are trying to ask, whether you say it or not, is, does this product have product market fit? And look, if you're very early, you may not have product market fit. So if you don't have product market fit, you should definitely talk about the fact that you should acknowledge that you don't have product market fit, describe why you don't have product market fit, and then talk about what are you doing to find product market fit. So that's number one, right? Number two, if you have product market fit, I would start with that, because that is what's going to make people looking at your business exciting. But look, Sanjay, I mean, both you and I are actually in the space of being investors. At the end of the day, look, the objective is not to raise funding, right? The objective is to build an enduring company. That is the objective. The objective is never to raise funding. And to build an enduring company, you got to start with a product targeted at a set of users, and you've got to get to product market fit. I find it easier to talk about user love, because that's something people can understand, right? Do your users love your product? I mean, it's a very simple question, right? And by the way, it is amazing if founders are honest to themselves. Very quickly, they're going to come up with this answer of yes or no.
Sure. And you worked with such amazing companies, Google, Dell, Microsoft, all were customer centric, and enough and more products which were customer driven. We have got a question coming up asking you, saying, Rajan, what is the sample size to gauge product market fit? What would be a sample size entrepreneurs should be looking at?
Look, the sample size can be, I mean, it should be more than 5, right? But for instance, in an enterprise SaaS company, right, if you've got, let's say, 2 or 3 large logos that you've been able to sell to, and they're using the product, and the feedback is very good, and etc. That's pretty interesting, right? That's very interesting for a seed stage company, right? If you're on the consumer, if you're a consumer app, right? Look, I'll tell you. So short answer is, look, there's no one right answer, right? It depends on the kind of business you're in, right? Enterprise SaaS is very different from, let's say, a gaming company or a consumer internet company or an e-commerce company or whatever, right? So I'll tell you, I'll try to make it a little more specific. Let's take the consumer internet side, right? I would much rather see a product with, let's say, 10 or 15,000 users with very high engagement, time spent with very high retention, than a product with 2 million users with really poor retention metrics. That should answer it, right? So it depends on the business. So so depending on the business, you should sort of think through what's a minimum scale, and then for that minimum scale, you should do that. Look, so for instance, we at Surge, we actually in the last cohort of 20 companies, we had 6 companies that were pre-launch when they got into Surge, right? But what was interesting about each and every single one of those companies, Sanjay, is they actually had interviewed a large number of consumers, right? If it's on the B2C side, hundreds of consumers. If it's on the B2B side, dozens of customers, large enterprise customers. And they had deep insight based on those interviews that I've done that instructed them to articulate to us who's the user, and why are they going to love this product, right? At a pretty granular level. So even before you launch a product, right, you should be talking to a lot of consumers. You should be talking to a lot of customers, right? Your customer may be a business, it may be consumers. But look, this notion of always talking to customers, really trying to figure out what's on their mind, why they're using certain features, why they're not using certain features, that is at the core, right, of a great product-led founder, is this obsession with
In
the
fact, there
customer.
was a survey by CB Insights where they found out the top reasons to fail, and the first reason was not cash, not funding. It was saying that the founders built product which nobody wanted. So in that sense, you are right. Driven. We have got another question coming up, Rajan, saying that do you believe customer loyalty in India is low? Is pricing driving everything? All the love towards the brand is through pricing. Is this true?
Look,
Customer
absolutely
loyalty.
not. Absolutely not. So the way you know that it's not is you can take, let's say, two non-transactional products. Okay, so let's take consumer internet. You can take two non-transactional consumer internet products. One will have 30-day retention of 3%, and one will have 30-day retention of 45%. One product people love using, the other one they don't, right? And then you can take transactional products, right? Like let's take an MPL, which has got very, very strong retention, right? And then you can take another gaming product, which actually doesn't have as much retention, right? So clearly there's a difference. Now, if you ask the question differently and say, are Indian consumers very value conscious? Absolutely, we know that, right? But it's not really about that, because a lot of consumer internet products haven't been monetized yet, right? And you look at the edutech space, right? I mean, Byju's is, by the way, I don't know whether you know this, Sanjay. There are 17 edutech unicorns in the world, and the
Wow.
most valuable edutech unicorn in the world is Byju's.
Wow.
It's an Indian company. It's the only industry where the number one unicorn in the world is actually an Indian unicorn. So we should all feel very good about that, right? But even if you take the edutech space, right, there's a big difference between products that consumers love and products that consumers don't love. And by the way, edutech is a space where you can actually build very strong unit economics. I mean, I think and build profitable companies, right? So I would say that hopefully that shed some light on it.
Sure. No, thank you for that. And if you had to talk about the future of the startup ecosystem in India, where do you see founders understanding about customer love, product market fit? All of us are great developers of product. We are in love with our product, not with our customers. Any views on the maturity of Indian startup founders?
Yeah, look, I mean, first of all, by the way, I mean, look, you and I have both been investing in startups for a long time as angels. Look, we've come a very, very long way, right? I keep reminding people this. Year 2010, India had less than 1,000 startups. Year 2020, we had close to 50,000 startups. Okay, it's a 50x growth in a decade. We had 0 unicorns. Now we have 30 unicorns. We had virtually no venture capital in 2010. Last year we had $14.5 billion. So our ecosystem has come a very, very, very long way, right? You look at some of our founders and the kind of companies that they built, it makes me so incredibly proud, right? So we are getting better, look, and when it comes to product management, I would say, look, I think Indian founders are probably better now at engineering than they're at core product development, right? They're getting quite good at, they're very good at, so for instance, operations, right? You had these massive scale companies that have been built with thousands and thousands of people, whether it's on the delivery side or, and so on and so forth. I think from product management, I'd love to see more done, right, to develop a product management community. In fact, I think two weekends ago on a Saturday, I attended Next Big What. Ashish was running this product management conference. I actually went and listened to the first 4 or 5 hours, right, because they had all these incredible product management product leaders, actually, like Gokul from the US, a whole bunch of them from the Valley that dialed in. They were going through how they think about product management, right? So I think this is an area, Sanjay, that it's like anything else, right? Like you have to learn it. It's a science, right? I mean, you have to learn the science and the art of product management and product leadership. And I think it's one where we should spend a lot of time on. And I think as founders, I would encourage, if you're a startup founder and if you're not a product, if you're not a trained product founder, right, just take 2 days off, stop whatever you're doing, and go spend time on the internet. And the good thing today is there's a lot of material on the internet. Absolutely. Right? on learning about product management, and then don't do anything for another 5 days. Just go talk to customers. Just go talk to customers, right? Because in the 2 days that you spend online learning, you learn a few frameworks, right? It could be the jobs to be done framework. Pick a framework. Pick 2 or 3 frameworks that you like, but all of them pretty much start with one place, which is talk to customers. Do a lot of customer interviews, but you can't just talk to them, right? You have to do structured interviews. You have to really make sure that you're kind of learning a lot, because I think that's what it is. I mean, you hit the nail on the head, right? Look, if you build a product, you launch it, you're in love with your product, you have no product market fit, you haven't talked to a customer, you're not going to make it.
Gotcha. So we have a question coming from an investor side saying that, can you talk about how a seed investor should look into a company if the product market fit is not there, right? So what should one evaluate, right? If the product market fit is not there, should we not invest, kind of stuff?
No, so look, as a seed look, basically, if you truly have product market fit, that is a Series A company, right? So this is pretty important, right? So as a Series A investor, you're obviously looking for an awesome team. Number 2 thing you're looking for product market fit, right? I mean, without product market fit, a Series A investor, usually, I mean, times change. We've lived in a 5-year period, which was kind of crazy around the world. All kinds of things happen, right? But today, if you ask, Series A investors, they would say, look, we want to see product market fit, at Series A, or So keep in mind that as a seed investor, if there's product market fit already, for sure, you're a Series A company, right? Meaning, you may not be able to get an opportunity to invest in that company. So I think at seed, what you should be looking for is, most importantly, you're looking for awesome founders, right? So we tend to kind of focus on founder market fit, right? Is there a reason that this team has a right to win in this space? And the second thing you're looking for is founders who are deeply insightful about the consumers that they want to build for, right? So I asked 2 simple questions. Who's your customer? You'd be surprised, Sanjay, how few founders can clearly articulate who's the user. Tell me who the user is, and pretty focused set of users, right? And the second thing is, like, why are they going to love you, right? What are the pain points that you're going to meet? So if it's a pre-launch company, a lot of times at seed, right, we should be investing in pre-launch companies. That's what seed investors do, right? And if you're investing in a pre-launch company, those really trying to make sure most of the bet you're making, right? Basically, you're betting on a founding team. But then, on the space, what you're trying to understand is who's the user, and is there deep enough insight about the user so that you get a pretty good sense. And by the way, what you're getting there is, product instincts, right? Is this team going to be able to build a product that they're going to love? Now, if the product has launched, you should look at early metrics, right? Even if, let's say, on the consumer internet side, you've got a couple of thousand users, you can look at some early metrics, and then you engage in a dialogue with the founders or the founding team to understand how do they think about these metrics, right? What do they like about these metrics? What do they not like about these metrics? But then, if they have 30, 40, 50,000 users, then it becomes pretty interesting, right? Because now all of a sudden you can actually tell. So I'll give you another interesting example, right? There's a company which we looked at about 4 or 5 months ago. They had 50,000 DAU, okay? 45 minutes time spent per day, but their 30-day retention was 4%.
Oh.
Okay, now that's interesting, right? That's interesting. Okay, what do you do with this company? Now that's if there was ever a assessment for seed and angel investors, we should have that in the course, right? So that gets tricky. But again, right, there's no retention there. So in that case, right, what's really important is to spend a lot of time with that founding team to understand, okay, what are you going to do? Why is that? Why is retention low? What are the drivers of retention? What are the 5 things you're going to do in the next 30 days to actually increase retention, right? What are the tests and the experiments you're going to run? So you have to kind of get into all of that, right? But keep in mind that, look, if you're a seed investor and you're looking for product market fit, a company that's already got product market fit, you're not going to make too many investments because those companies are going to be Series A companies, right? So they're going to go out to Series A. Yeah.
So we have another question from Palak asking, saying, from a B2C perspective, during the stage of figuring out the product market fit, should they focus on getting revenues or just keep on building what users love? Retention metric. I mean, is it either or both should be there?
Yeah, I mean, look, the thing is, if you don't have product market fit, right? My view is, even if you get to revenue, it's going to be low quality revenue, right? because the revenue is going to go away. So I'll give you an example of a company that I know well. It's not a Sequoia company, right? But it's a company that I know really well. They're a SaaS company. They're at about, let's call it $75,000 a month of revenue. They're growing very fast, right, Sanjay? But their monthly attrition is 4%, 5%. 60% of their base is gone, right?
Yeah.
And I keep telling this founder who I talk to, not very often, but quite often, please focus on building a product that customers love, right? Because they're all enamored with, okay, we're growing revenue, we're a SaaS company, I'm like, look, it doesn't matter, because every month you're doing twice the amount of work just to get the same amount of revenue, right? So that's why it really makes a difference, right? So I would say, again, it comes back to this. I'll give you another example, right? Like if you're an e-commerce company today, and let's say you've got 3 or 4% gross margin and you've got negative contribution margin. It's a really bad place to be. In a world where you could raise $1 billion to drive hyper growth, right? There was a world, by the way. We all lived in that world until let's say 8-9 months ago. Maybe it was okay. I don't think it was ever okay, but today that's not going to work, right? So you've got to be able to think about getting to this product market fit.
So,
by the way, I think it's not a question that was asked, but if you're a founder that's already in a startup that is generating revenue, right? Ask yourself this question: is your revenue high quality or low quality? And it got to do with two things, right? One is retention, obviously, but the other one, Sanjay, is sometimes you can get revenue from a user group that is outside of your core persona, right? Especially if you're a SaaS company, right? All of a sudden you'll find that you defined your ICP a certain way, your ideal customer profile, right? But your revenue is now coming from somewhere entirely different. The only thing I can tell you about that revenue, it'll go away very quickly.
True.
It's not, it's not your ideal customer profile, right? So again, it comes back to who's your customer, why do they love you?
No, absolutely. I mean, just to share, one of my portfolio company called Coolberg, before we invested into it, we asked the founder on a repeatability in the same outlet how much that non-alcoholic beer was selling and the numbers, and then we ended up investing. Now, Rajan, if you can just help us quickly understand your surge investment thesis, how can one apply? What is the process? How do you evaluate startup at Surge? If just brief about what Surge is about.
Yeah, so look, I mean, maybe I'll start with why did we launch Surge, right? We basically launched Surge to try to address a whole set of some very critical challenges that Sequoia, Shailendra Singh, and the Sequoia partners actually saw in the ecosystems in India and Southeast Asia, which are roughly similar, right? So although the ecosystem has come a very long way, we still have pretty significant challenges for seed stage founders, right? The first was capital, right? And I saw this as an angel investor. You have to raise 2 or 3 rounds of capital. You have to raise 1 or 2 crores, then you have to raise another 3 crores before you can get to Series A. And that really has 2 things that it does, right? One, the founders have to spend, if there are 2 co-founders, one founder is spending all their time, all they're doing is just raising funding. So that takes time, right? And what that means is you're not as focused on what you should be doing, which is building your product and building your company. And second is, it dilutes, right? So you end up with significant dilution before you can get to a Series A. The second big challenge that we saw was, despite all the progress we made in our ecosystem, there wasn't as much support, mentorship, and advice on building an enduring company, right? I mean, look, here we are in 2020, and we're talking about basic concept like product market fit, right? Right? We really shouldn't be, right? We should be talking about more advanced concepts. So whether it's product market fit, how do you hire great talent? How do you think about growth? How do you think about marketing in a capital efficient way, and so on, right? So that was a big challenge. Third challenge we saw was, there was a lot of things that were happening in the US, in China, even in India, Indonesia, and so on, where the learning wasn't as happening as much, right? Cross-border learnings from China, learnings from US, etc. And the fourth one was when you were ready to raise your next round, even for a good company, it was taking 4, 5, 6 months to raise A. So those are all challenges that we saw for seed stage founders, right? So we said, look, let's come up with a program that tries to, in a very programmatic and systematic way, address these challenges, right? So as a result, we invest $1 to $2 million in every search company before they start search, right? And then we have a 14-week program where we work with companies on all the different aspects of building an enduring company, right? It's very structured. It's and so on, right? And so that's the second thing we do. Third thing is, we work with companies in a very, very hands-on way. The search team, the Sequoia partners, and we have a strong group of mentors that actually work with our companies. So that's what we do. And then the fourth thing, we used to do this when we were offline. Now with COVID, we can't do this, but we actually spend time in these markets like China, US, and so on. Now we'll start doing that when we get out of COVID. And then the last thing is we actually have something called upsurge, where we get 30 to 40 of the top Series A investors whenever the companies are ready, right? So a lot of companies may not be ready in 4 or 5 months. So whenever they're ready, they can come to upsurge, and we help them accelerate, their Series A fundraising. So that's been quite successful, by the way. So in our first cohort, we had 17 companies. 12 of them have raised Series A already. And between our first and second cohort, our search companies, Sanjay, have already raised over $250 million of follow-on funding, right? So that's not, again, fundraising is not the objective, but this curation that we do, where we bring the investors, we obviously make sure these companies are building strong companies, that sort of played out. So that's sort of what we do. Now, to your question of how do you apply, basically go to surgeahead.com and apply. We have a rolling application system, Sanjay, where you can apply anytime. We will look at your application. In fact, Surge 4 doesn't start for many months from now, but we've already decided on 4 companies, right? And what we do is we'll evaluate the company, and if we decide to partner with a company, then we'll actually wire the funds. But you'll start Surge whenever the next cohort starts, right? So that's sort of the model that we have. So it's an always-on application process. You can go online, you can apply. We look at every single application, and then if we like the company, we'll obviously have a whole set of meetings, and then we'll decide to partner with you. You'll get the funds, but then you'll join the cohort when the cohort starts. So that's and your last question of what do we look for? Look, it's much like what you'll hear from most other investors. Look, the big bet we're making is on the team, right? So we spend an enormous amount of time getting to know the team, understanding the team. So that's sort of the team. And the second is really the space, right? We want to make sure that it's a space that lends itself to building a very large company, right? We're not really interested in a company that's going to get to 100 or 200 crores of revenue, right? I'm talking about 7-8 years from now, not right now. So that's the second thing we look for. And the third thing is, look, if you have launched and you have some set of metrics, we are going to look at those metrics, right? To figure out things like, are there early signs of product market fit? If not, can you articulate as a founder what you're doing to go figure out product market fit, right? So for instance, guess which metric we look at first? Retention. But by the way, you don't have to be launched. As I said, in our second cohort, where we had 20 companies, 6 companies were pre-launch when we decided to partner with them. So those are the kinds of things we look at.
So we have a question from Hitesh asking across, saying that should a founder look at additional revenue stream, adjacent revenues channels? Should they move their focus from their core, business and optimize on building capabilities, on building multiple revenue channels? What would be your views on that?
Are you back? I lost you for a second, Sanjay. Is the connection back?
No. So Rajan, idea is we have a question up on the screen. If you can answer that.
I can see it. I can see it. So look, I think it's a very good question, right? So I would say, look, there is no right answer to this because it's very contextual, right? So I'll give you some examples. So let's say you are in a deeply impacted industry, right? I'm assuming it's a COVID contextual, it's a COVID related question, right? So let's say you're in a deeply impacted industry like international travel, okay? But you are in a fortunate position where you had raised a seed round or a round, and you're a very early stage company, right? And you had raised a seed round where with a very low cost structure, it's going to give you 18 months of runway, right? So you have one of two choices. Either you can say, I'm going to decide and wait it out, or you can say, look, I'm going to pivot into something that maybe is not as deeply impacted because I have runway, right? And the team is agile enough to do that, by the way. So we have companies that have done that, right? Even in search, right? That have sort of said that. So that's sort of one option you can think about it, right? But let's say you're actually in a deeply impacted industry with no runway. Then you have one of two options, right? Either you can, if you're an awesome team, a lot of companies are doing acqui-hires, right? You can find a way to get acqui-hire, or you could actually say, which is what you're saying, which is find some way to stay alive. Look, I have a very, a very basic principle for startups, right? Look, to win, you have to first be there.
True.
If you're not there, you have no chance. You're not in the game, right? You have to be in the game to win, right? So if what you have to do is, like, I don't know whether you know this story, but Deep Kalra at Make My Trip, right? There was a time, in these early days where they were doing software development for other companies, because they had to sort of figure out a way to stay alive, right? So if you can't raise funding, you have to stay alive. So I would say, if you have the runway, stick to what you're doing and make your product stronger, and focus on finding product market fit. But if you don't have the runway, you have to find a way to survive, right? And to find a way to survive, do whatever you can to survive, right? And that is not the optimum. But as I said, right, if you're going to win, you have to be in the game, and you can't be in the game if you can't survive. So
No, appreciate. So, if we can get into a small rapid fire, Rajan, if you can give us
sure,
another
sure.
5 minutes of your time. What would be the three sectors which you would be seeing successful in near future? Three sectors, if you had to pick three sectors.
Yeah, so I'll tell you, look, edtech, there are a lot of companies now, right? And everybody's trying to build an edtech company, but we've seen explosive growth in edtech, right? Number of users with using online
EdTech,
education products is doubled in the last couple of months, edtech. I would say digital health, I
digital.
think is very, very interesting. We're going to see 1,000x growth in digital health. And I'd say the third one really is automation focused software, right? Software, I think this is the new era of automation. We are entering a whole new era of automation. So if you ask me for three, I'd say those three.
Fantastic. If you had to pick three unicorn names which you believe will be unicorns in 2020 or 2021, three unicorns in India which you believe inside your portfolio or outside, whatever works.
No, look, so I think that would not be fair, Sanjay, because, between Sequoia's portfolio, which is very large, and my personal portfolio, we have a large number of unicorns. So
Yeah.
I don't want to do that. I'm not going to go there, because the last time I did that, I got into trouble. I got like literally 100 messages saying, hey, how come, so let's not go there. But look, one thing I can tell you is, look, India has, large number of extraordinary companies, right? And I had said this 2 years ago, right, when India only had 10 unicorns. That 2 years ago, yeah, 2.5 years ago, something like that. That by 2025 we'll have 100 unicorns. Look, this year it'll be difficult for us to imagine that, because we are in the worst sort of healthcare and economic crisis we've seen in 100 years. I still stick to that. We will have 100 unicorns by
Fantastic. So
2025.
another rapid fire one.
Yeah,
Another
that's
rapid quick one, if you can answer and pick your choice. A pitch from IIT, IIM, chartered accountant, or a regular entrepreneur. Which is your pick?
Look, I would pick somebody who's been an entrepreneur, even if they failed, because they've been through that journey, right? But keep in mind, all four would be fine if they can very clearly articulate who's
Yeah.
the user, why are they going to love you, and what have you built, right? If the
Yeah.
chartered accountant had, let's say, awesome retention metrics and
Yeah.
very, very deep insights about the consumer, and had a personal reason to be building that company, I'd go with the chartered accountant,
Sure.
right? So again, it's specific.
Cool. Where do you see in India's $5 trillion economy? Is it going to be 2025, 2030, 2035? What's your pick?
Look, I don't know, Sanjay, and in our business we tend to think about very long term horizons, right? So one thing
Yeah.
I know for sure, India will get to $5 trillion, and when India gets to $5 trillion, it's going to be a gigantic economy, and we are going to have many hundred unicorns, right? So in terms of timing, look, I don't think anybody can tell you today, because there's so much
So,
uncertainty.
I have to ask this question from my selfish reason. Were your views on 100x.vc model, where we are trying to write the first checks, the seed check, trying to become a lead investor, at a very, very early stage, nascent, before even search comes in. What are your views on that kind of
Look,
model?
I think, look, I'm really glad, Sanjay, that you and your team are doing 100x, the 100x VC platform, because India needs to have many, many more entrepreneurs. And as I said, despite all the progress we've made over the last decade as an ecosystem, it's still very difficult for founders to raise funding. So it's great that you're doing what you're doing, and I hope that you will fund hundreds and hundreds of companies. I think it's terrific. Look, I mean, India needs a lot more capital at every stage, right? From the very first check to seed funding to Series A, B, C, D, E. Because if you're going to go from here to where we should be, right? We need just massive amounts of capital, and also value-added investors, right? Who can really help founders build companies the right way.
We have got one more question coming from Kinnar Sachdev. Would you consider investing in companies that compete with one of the existing search portfolio company?
Look, look, Surge is a very early stage pro. Short answer is, look, I mean, if you've got a company, let me pick one, right? Like InVideo was in our last cohort, which is a prosumer video creation software company, right? If you've got an exact company to InVideo, then no, we will not do that. But remember, if you're building a prosumer company in a broader space, doing something different, that's what I mean, right? Competition depends on what it is. In Flipkart and Amazon, I would say, kind of compete, right? But like for instance, Meesho is in the e-commerce space, but is doing something very, very different, right? And then if you look at Meesho versus a Bulbul is doing something very different to Meesho. So they're all in e-commerce, right? So that's what I said. It's a nuanced thing. It really depends. I'll have to look at the two companies and say what would we do. But hey, look, you should apply. There's no harm in applying. We'll take a look at it for sure. I commit that to you, and we'll get back to you. And if it's, by the way, if it's a competition thing that we're worried about, we won't ask for any more data. We'll just get back to you and say, hey, look, we don't want to do this. But that doesn't really happen. That hasn't happened at all yet.
Is age profile, the question has come up, is age profile, what kind of profile of age you prefer? Is there any restriction on age?
Look, we don't have a preference, right? We don't have a preference. I mean, in general, what we see is, we see more experienced founders building B2B companies, right? SaaS companies. We see consumer internet companies. I mean, in general, right? It used to be, we saw a lot of 21, 22-year-olds right out of IIT trying to be founders. We see some of that today. We don't see it as much. We probably see, founders who are in sort of the 26 to 27 to maybe in their early 30s for the consumer internet type companies, right? We're seeing a lot of founders, as you know, Sanjay, who are serial entrepreneurs, second time, third time companies. We're seeing a lot of folks who've spent 5, 7, 8 years at places like Flipkart and InMobi, and Google and Facebook and Amazon, etc., come out, and then we see SaaS entrepreneurs, in their 40s. I just met a team, they're in their 50s. Look, at the end of the day, right? I don't think it's never too early to apply to Surge, and it's never too late to be an awesome founder, right? It all comes back to what is the mission, right? Why are you so obsessed about solving this problem, right? I mean, right? Some of the greatest companies like McDonald's. The McDonald's founder was in his 50s, I think late 50s or something, right? I just saw that documentary a year ago. We have so many examples of, there's a lot of SaaS companies today, right? There are $10 billion SaaS companies that were started by founders who are in their 50s. So it's never too early to apply to Surge. It's never too late to be an awesome entrepreneur.
On closing note, any advice to entrepreneurs, what they should be doing in current times, and what do you see post-COVID era for Indian startup entrepreneurs?
Look, so firstly, I think we should all acknowledge that it's a very, very difficult time, right? It's a very difficult time for humanity at large, for the entire world. Doesn't matter who you are, doesn't matter where you live. It's a very, very difficult time. It's an incredibly difficult time for all businesses, right? Whether you're the Tata Group or whether you're a very small business. And for startups, it's especially difficult, right? Because as it is, we're dealing with so much uncertainty, and now we have this added complexity of a crisis that we haven't seen in 100 years. So I think first thing that founders should keep in mind is, look, you're not in this alone. It's difficult for every single founder out there. But then again, right, if you didn't get into entrepreneurship because it was going to be easy, you got into it because you were passionate, that you were obsessed about solving a problem, and now you just have to do it in a very tough context. I think what you should keep in mind is everybody else is in the same boat. If you're a founder in India today, but hang in there, right? Be very thoughtful, but also be very decisive, and most importantly, with your team and your family, be empathetic, because they need you now more than you can ever be. And all I can tell you is, if you're still an Indian startup founder at the end of 2021, you are personally could have grown 10 times because you're leading through a very, very difficult time. Your business is going to be incredibly stronger, and from there on out, you're just going to be on sort of a crazy viable growth path, right? And then if you're thinking about starting up, look, there's never been a better time to start up, only because if you're going to start up now, you're going to be very, very serious, right? You've got a problem you're really passionate about, you're going to obsess about solving that problem. And I'd end with this: if you're doing, whether you're an existing startup founder or whether you're thinking about startup, focus on building something that users are going to love and they're going to keep loving.
Absolutely. That was such a positive note, and I think all of us had great insights in terms of how to build a company with product market fit and what kind of metrics to be looked upon. Thank you, Rajan, for your valuable time. We stretched over 20 minutes, and we have got so much questions still unanswered. Sorry, folks, we had very limited time window, and thank you, Rajan, for making it at 100x Live. Thank you.
Thank you so much, Sanjay, for hosting me, and thank you everyone for dialing in.
Bye bye.
Bye-bye.
Bye bye.
Bye.